Users of CashCalc can now add onshore and offshore bonds directly into their cash flow, and the system will automatically work out all of the chargeable gains and any tax due on the disposal of those bonds. So to add a bond into your cash flow, on the left-hand side on the gross modeler, click on Inputs and Timeline, click on Savings and Investment, add Savings and Investment pot, and we can just simply call this bond. What category is it? You've got two. You've got onshore and offshore. Obviously, the tax is going to be slightly different with both. So let's just start with onshore. This is owned by Keith. The original investment was 50,000, and then the number of policies is 10. Started to make that in 2006. So 20 years ago, those policies were purchased, and the starting value as of today, those bonds are now worth 100,000. Now you can record any previous withdrawals, maybe the 5% allowance each year. You can record that on each calendar year. And equally, you can record any previous top-ups as well. And again, that will change the calculations in the background. And finally, as with any investment pot or pension pot, we can set a growth rate. So over the coming years, we expect that pot to grow at about 4%. And we can now add that into my cash flow. I just want to set a new liquidation order because I want the client to start taking income from that pot before any others. At the moment, it's going to be at the very end. So if we click on Set Liquidation Pot, we can just move that up to the top. We can just update liquidation order at the very bottom, and you'll see that play out on the cash flow model straight away if we now come across to it. If we come across to savings over time, you'll see there's my investment bond. It would have been at the very top here, taken the income last, but now it's at the very bottom. We can see that every single year it's growing at 4%, and then post-retirement we're going to start taking income from that pot to cover any deficits, and it's only going to last for a few years after retirement. Money in, money out will show that clearly as well. So you can see the incomes coming in from his and her, Barbara and Keith, easily able to cover the expense line, and the expense line pops up a bit a couple of years after retirement because the clients are going on some nice holidays, and again that deficit is being met by the bond sale. So we can turn that on or off to see that quite clearly. And then finally, are there any taxes to pay? There are clearly taxes to pay whilst the clients are employed, but after they retire, there are no taxes to pay in those first few years. So clearly there are no chargeable gains, and you can see that a little clearly under yearly breakdown. It really gets into the weeds of it every single year. It will always give you these little tool tips, these little alerts as and when something out of the ordinary happens. So in the years after retirement, something out of the ordinary does happen. There's a bond withdrawal, so we can click on the Insights tab on that year, and it tells us why that alert was appearing, because there's been a bond withdrawal here. And if we click on the Money In tab, it explains that in a bit more detail, the maths behind it. So we can see the ad hoc withdrawal from the bond. There's 46,000 withdrawn. It's worked out that the gain of that withdrawal is 40,000. And then the client's been able to use up a lot of their allowances, and 21,000 of that gain is now charged at 20%. So that's the tax due. Obviously, this is an onshore bond, so that 20% tax credit is given back to the client because the provider's already paid that on their behalf, and therefore there's no tax to pay in any one of these years, again, post-retirement. Now, that obviously is quite different from an offshore bond, so we can force the system to recognise offshore rather than onshore. So if we come back to Inputs and Timelines, edit the onshore bond, we can just simply change that to offshore. If we click on Save, that will change the underlying calculation. So if we come back to my cash flow model, suddenly the money in and money out will be exactly the same as it was before, but suddenly the taxes tab has changed slightly. You've got on the second year of retirement, you've suddenly got some tax to pay, Keith, 5,447. And if we click on the yearly breakdown, if we scroll down here, again 69, you've got again the Insights tab flashes up. There's been a bond withdrawal, and on the Money In, you can see the gross amount. Again, the gain has been calculated at 45, and there's a 20% tax to pay. Obviously, there's no credit on this one, hence why the client now has to pay this rather than credit it back to them. Incidentally, if we go back a year before, there was a bond withdrawal, but that's just simply taking the original capital, so there's no tax to pay on that one either. We want to force the system to recognise maybe a top slicing, so the client's paying 40% tax. So we're going to Keith's going to buy himself a nice car. So let's go back to Inputs and Timeline. Let's go back to Expenses, add expense. Let's add a nice luxury car on a discretionary spend on a one-off basis. Keith's going to spend 100,000 on the year he retires. Let's just set that to his retirement age, and that's now going to hopefully push the chargeable gain into the 40% tax bracket, and therefore it's going to work out the top slice for us. So again, onshore or offshore be the same logic. So if we go back to my cash flow model, suddenly the taxes are paid the year before, as we were before. So you've got the tax paid now for the client is 9,069. And if we go to the yearly breakdown, you'll see that a little clearer. So again, if we go back to 68 here, there's now 2 alerts flashing up. Again, the bond withdrawal that we had earlier, but now there's a top slice relief. So clearly they've moved into their 40% tax bracket, and therefore it's actually telling you what the top slice relief has been calculated as. And if we go to the money in tab, again, it will show us how it's got to the 9069 figure. Again, trying to work out what the overall gain is, what allowances have been used, and how much of the resulting gain has ended up on each one of those tax brackets. So that's how users can include onshore and offshore bonds directly into the cash flow, and you can see that dynamically adjusting with the different inputs. As I said earlier, every single user of CashCalc has always been able to calculate a chargeable gain on CashCalc outside of the cash flow itself. They've always been able to, you can still use the tools tab at the very top here. All these different calculators do something slightly different, a lot of them relevant to a different tax regime. So you can click on Chargeable Gains Calculator at the very bottom. And this is just if you want to quickly create a chargeable gains calculation, again, outside of the cash flow. So on the left-hand side, some simple input screens. So we can type in the client's income. This is the non-bond income. So for this, his and her, Keith and Barbara. So Keith's 70,000 salary and the personal allowance. There's no savings income or dividend income to consider. What's the bond information? So you can add as many bonds as you like. In this case, it's an onshore bond, 50,000 initially invested. Now it's worth 100,000 over the course of 20 years with over 10 policies. Have there been any withdrawals? In this case, there has been. The client has been making most of their 2,500 or 5% allowance. So we've put in 2,500 for every single year. You don't have to put in 2,500 for every year. You can just simply put in 2,500 at the top and populate, and it does every single row. You can do exactly the same with top-ups as well. Record every single top-up the client has made, and then the final result at the end will calculate that on the fly. So we can see that the total tax liability for that client this year is just under 37,000, made up of the tax they're paying on their salary and the tax they'll pay on their chargeable gain, 16,500. But if you click on the row, it then expands it and shows the calculation for us. So you can go into quite a lot of granular detail. We can see that the total premiums paid, the total premiums in is 50,000, and they've made 52,500 withdrawals. The current value is 100,000, so therefore the gain is 102. 500, the top slice, 102, 500 divided by the 20 policy years is 5125. It's calculating that for you over here. And then the full tax breakdown. So the non-bond income, the 70,000 salary, the tax due on that is 20,460. There's no savings or dividend tax to consider for this client. Then the bond tax, so the taxation on the gain, the 102,000 gain, if we tax that today, that'd be worth 43,000 based on the rates you're getting here. Then works out the taxation of the top slice, that 5125. Client's actually been able to make use of their personal savings allowance on this one. So the tax on the 5125 is actually 1850. And then finally, all of these figures come together to give you the tax liability, the relief, and the summary. So the overall tax liability is the 20,460. Then plus the 43,000. So basically the tax you're paying on the bond gain and your salary income tax equals 63,000. Then the minus the tax relief. So this takes into account, because it's an onshore bond, it's automatically taken into account the 20% credit you're getting back from the provider. So the 22,000 was essentially the gain you're making on the bond, 43,000, but then obviously minus the 20% tax credit would be 22,000, and exactly the same with the top slice as well. So 20% of the 5,000 figure gives you about just over 1,000. Remove 1,000 from that 1850, you get about 825, which is then times that by the 20 policy years gives you the full top slice relief calculation. Then there's the credit you're getting back, so the 102,500 gain. Again, that 20,000 figure there. So your total tax liability is the 63,000 that we calculated a second ago, minus the top slice relief, minus the credit you're getting back from the provider, equals 36,960, divided between the tax, the chargeable gain on the bond disposal, and the 20,000 on the income tax. And again, it essentially takes us back to our headline figures up here. So you can just simply show the clients the headline figures of what the tax is, or you can go into detail by clicking on that row and looking at the underlying calculations, and then click on Create Report at the very end. So CashCalc is always giving the ability to run a very quick chargeable gains calculation on any bond that your client might hold, but now we've added that capability directly into the cash flow as well, so you can mix that with all of the other pots the client has and project that over the long term. So I hope you found that useful. Any further questions, feel free to reach out to our help desk.